Guys, it's Sandski, and in today's episode, I just want to quickly go over, what keeps me out of a trade and what I look for to help me stay out of bad trades and what you guys can do to do the same thing. So, as I mentioned in the last video, there's four, key levels that I really like to use that I use every day on my charts that are must-haves for me. That's pre-market high, pre-market low, and the previous day's highs and lows. So in this example that I picked out, only two of those key levels came into play. We have yesterday's high a day right here, which is the green solid line, and then the pre-market low. And if you guys can see, you know, the first hour of the day, first hour and a half wasn't too bad. We get a strong push down at the open, but then we kind of chop down, you know, to around the 411.50 level. But then we get a reversal, and once again, it's not horrible, but not the best in the world as we climb back up to right around the pre-market low level, but we fail to maintain this level. And what do? We come back down and land right around our other key support level, which is yesterday's high day. And you guys can see that pretty much throughout the rest of the day, after the first hour and a half, we don't do anything until the last, I don't know, about what is this, hour of the day. And I'll explain just in a minute why I don't like trading the end of the day that much. But these days are really tough, especially if you have a green streak and you feel like you just have to trade to maintain that streak. You won the extra day, even if it's a small gain, $50, $100. Or another bad thing is revenge trading. You lost the day before, so you feel extra obligated to have a green day today and make it up right away. But those two things are also negative factors that may imply when you're taking a bad trade. So the things that I really like to look for is our key levels, breaks and holds of our key levels, which in this case we didn't really get any all day. And then the second would be our secondary indicators such as VWAP and the 9 EMA. So right here, I'll highlight one setup that I think's a B setup, not quite an A plus setup. That's why I didn't take it, but like a B setup. If I had a positive trade earlier in the day, and I had a couple $100 of profits laying around, I might have tried it. Or if it wasn't towards the end of the year and price was choppy, I would have tried it. But I didn't try it because this is why. So right here, like I said, we get a strong push down right here, but we consolidate right below yesterday's high day. As you can see, candles 1, 2, 3, 4 wick candles right in a row. We get a push above our level, which I love, a retest, and then we continue upwards, which I really like. But right here, I would have entered, but you see the problem is VWAP's not that much higher above. And what do? We wick right off VWAP and straight back down to the 9 EMA. But in this case, we hold the 9 EMA, we push above VWAP on the next candle, and then we slowly churn our way up. So I like this trade for the fact that if this was not such a slow churning day, I would have probably taken it because it follows our rules, a break of a key level, a pullback, and then it continues. But also, the risk to reward is not that great because once we're breaking and retesting right here, we only have about another 30 cents to go until we reach VWAP. And then once we break VWAP, we only have about another 40 cents until our key level with the 200 EMA standing in the way as well. So this would be good if you wanted a quick scalp trade after you've already secured profits. But to take this as the first trade of the day, I personally would stay away from because it's just too risky. And then same thing here. We push down, but right here, so we're below our pre-market low. We have the 200 and the 9 EMA that we barely break below VWAP. We retest them and we continue down. This right here is another good, 10, maybe 15%, depending on what contracts you're play. But then we slowly just melt down and we don't get anything until the rest of the day. We don't break above VWAP. We don't break below our key level. So we're just chopping in this 50 cent range. And to talk about the end of the day situation real quick, end of the day trading is extremely risky as it is very volatile. I've been on both sides of the spectrum where you have a play and the contracts go 70% in minutes and vice versa, that you can lose 70% in minutes. So I really try and stay away from end of the day plays as much as I possibly can. But I'd give this, probably a B setup as well. But this I would probably be unlikely to take. I just like the fact that it does play into my strategy and the rules that I follow. So we get a break of the level, we get a big push back up, a very strong wick, and then we come right back down. If you entered right here off this play, off this wick, and you rode it all the way down to here, you probably would have made 100%. But I try not to play end of the days due to just extreme risk and volatility, and I don't really want to ruin, a good day's worth of patience that, you work so hard to do, and you don't feel like you have to force yourself to take a trade, or even worse, you don't want to lose profits that you've already made. So I just wanted to quickly go over, what keeps me out of a trade and what you guys can do to look for better entries and stuff. And yeah, just make sure your key levels are the most important thing. Make sure you get a break and a hold of your key level. My rule is I like to have a break. So right here, a second red candle and then a continuation down. But as you can see, this is a really weak candle. And what do we get next? Sure enough, we get a green. So this would have been a bad entry and I would have paid the price for it. And then make sure your indicators align with you. The indicators aren't lying. You got to make sure they're speaking to you. You just got to be patient, really look at what you're seeing, and then execute. If VWAP's hovering within 30 cents above your key level, it's probably not a good idea to take that trade until both indicators are clear. Be more cautious than not. It's better to be extra cautious and practice patience by not taking a trade than it is to force something and potentially lose, and then you're only setting yourself back. But I hope you guys learned something. Let me know if there's any other types of videos you want me to cover. And then thanks for watching. I'll see you guys later. Peace.